What's good, YouTube? Welcome back to the Brown Gent. In today's video, I want to take you through the investing mistakes, the biggest ones that are keeping you poor. Because there's no doubt about it. The reality is every single one of us makes mistakes. The idea here is the less mistakes you make, the more money that you're going to make. So what are those biggest mistakes? That's what I'm going to cover in this video. But if you haven't done it already, make sure you hit subscribe, hit the like button, share the video with a friend, and let's get into it. So the first thing is that you buy into the hype. And when I talk about this, I mean sometimes you can do all the right things, you're investing in all the right things, but then you hear from a friend, hey, I just put $10,000 into a stock, I heard it's going to 10x. And even though you've never heard of this, the allure or the hope of making some fast and easy money can distract you from the plan and the investments that you've been making. And this is what we saw a ton of people do when it comes to meme stocks. You try to avoid it and think about something like Pepe, right? All through May, everyone was talking about Pepe. And because there was so much hype, it kept going up. But at some point, there wasn't enough new money coming in, so the later buyers actually got completely dumped on and they were treated as exit liquidity as a corrective. Am I talking about the future of Pepe and will it go up? No, but the reason people were getting into it was they were hearing so much about it, and FOMO is so real. And people just didn't want to miss out on a life-changing ability to make money. The reality is, if it's too good to be true, it probably is. And you're way better off just sort of tuning out all of that noise and just focusing on what you know is right. The second mistake is not doing your research, and this is a lot tied to the previous. So my recommendation before you buy anything is ask yourself, what do I know about this company? If you can't explain what the company does and why you're bullish on it to a grade 7 student, are you sure you should be buying into this company? I've asked tons of people, somebody I know, they bought some sort of wind or water company, and when I asked them why, they're like, well, it makes water, right? And I'm like, I was so confused. And I think I see a lot of people doing this once again because they hear from other people it's great, so they almost shortcut doing their own research, which is why I'll always say in every video, I'm not a financial advisor. You have to do your own research. No one else is as invested in your success and your positive outcomes as you are. So doing research is critical. And it's not just sort of understanding just the company, but also understanding the market in which they play, the economic climate of the sort of industry they play in. So I just did a video on NIO, and the Chinese sort of infrastructure and their exports have come down. And despite the US economy getting stronger, we see a very different thing happening in China. So ask yourself, do you know much about sort of the company you're investing in, where you're where they're sort of located, their sort of future prospects, everything around it? And not even just that, but maybe even understand their price trends. How do you read their chart? Do you exactly understand where the right buy zone is and where the right sell zone is? These are all the things you should be doing before you hit that buy button. I also recommend these are also some of the things you should do for a current investment that you have before you sell it, because sometimes you might be selling it too early as well. The third mistake that I want to cover is not taking profits. If you've been sort of subscribed to this channel, if you've watched me before, this is something I've talked about so many times, especially given that the market is so cyclical. There are so many times that people will say, hey, I bought something, let's say I bought Ethereum in 2020, in 2021, watched it run up from $2,000 to almost 5,000 US, and then all the way back down. If you didn't take profits during that cycle, you weren't an investor, you were a witness. You got to watch other people make money, and you felt great, and you were sitting there screenshotting these gains, sending them to your friends. What I always tell people is that if it's good enough to screenshot, it's good enough to take profits. And I'm not saying, hey, just sell everything. Consider laddering out of your position. Maybe you have, I don't know, let's say you have 10 Ethereum and Ethereum doubles. Maybe consider taking half of the money off. All of a sudden you're on house money. It goes up another 50%, maybe take another 20% off. Find a ladder sort of step program to sort of pull yourself out, because as we've seen time and time again, the market is cyclical. What goes up will come down. Over the long term, the best assets have a positive slope, and that's what you see with cryptocurrencies, that we see with Apple, with Tesla. But these are the things that like people forget about when they're super excited. The fourth thing is not having a plan. And this sort of ties into everything I've mentioned so far. When things are going up, it's so easy to be swept up in the emotion. And if you don't have a plan, you're reacting in the moment. And a lot of people will react and say, oh my God, things are fantastic. I am not going to sell. And just like when things are down and they're down in the dumps, people are like, oh my God, let me ditch this. Let me ditch this. If you think about why they say 90% of investors / traders are losers, it's because they can't control their emotions. They don't have a plan. They sort of just invest and they treat it like gambling. You should be treating investing like investing. If you want to gamble, go to the casino. I'm sure your local government would appreciate it. But if you're here, if you're sort of wanting to learn, my recommendation, once again, make a plan and stick to it. That doesn't mean you can't pivot, but you got to do your research. And the research tells you that you can pivot, then do it. But don't just do it because, oh my God, I feel like let's get 100x, right? The next mistake I want to talk about is utilizing leverage or buying options. There is a clear winner and losers in options trading. Yes, you can win in options, but the people who consistently win in options are the ones who sell the premiums. Or they gain the premiums by selling options, so selling puts and selling calls, because you are using either money or stocks to secure those contracts. What you don't want to do is sort of buy like a lottery ticket that says, okay, well, if this sort of asset goes up by, a certain amount within a short period of time, I make money. If not, I lose it. I lose 100%. The biggest advantage you have as an investor is time, and it's incredible to see that people are willing to give that up for an additional buying power. What people will quickly realize if they stop doing it is they would win more frequently and they would grow their account much faster, almost like you have that leverage. Now you can actually sort of get a bigger share of the pie because you have a way bigger account. The next mistake I want to talk about is not diversifying. So I see some people who have accounts where they only own one thing. So I think about the sort of the Doge master, as he calls himself, and he sort of made a bunch of mistakes, right? He didn't diversify. He only owned Dogecoin. And I understand it's nice to be super bullish on something, but there's not a single company in this world that I could sort of say, hey, I am all in with this company. I believe in Tesla, I believe in Apple, I believe in Microsoft, I believe in Nvidia. Does that mean that I would put 100% of my money into only one of these plays? Of course not. Why? Anything can happen. And I don't want to risk everything I've worked so hard to gain to go up in smoke. It's a small chance it happens, but I want that chance to be zero. Imagine how small that chance is when I have that spread among the biggest companies in the world. Now it's got to be like Armageddon or the pandemic for things to go badly. Just because I'm saying sort of diversify and not diversifying is a mistake, doesn't mean that you should go out there and buy all sorts of trash. I see a ton of people going out and buying a bunch of meme stocks, sort of like not knowing what to buy and sort of saying, hey, like this share is like $1 a share and everything else. Let me buy those. The reality is you want the majority of your portfolio to contain high grade investments. So this is stuff like the blue chip stocks, or if you're looking at cryptocurrencies, you want to be looking at Bitcoin and Ethereum. You don't want to have a portfolio that's just full of speculative, like biotech sort of startup companies that are all sort of depending on their catalyst to go right, or phase 2 and phase 3 trials to do very well, have fantastic readouts, or like other meme stocks or meme coins, right? When you do that, you are at high risk of ruin, right? You have potential to go broke. What I like to do is I like to have at least 80% of my money in things like Bitcoin, Ethereum, Nvidia, Tesla, Apple, whatever. And then I use the profits from there to fund my speculative bets. And if you watch my channel, Mara, Zomedica, and Nano Dimensions are my 3 biggest speculative investments. And they sort of make up about like 16 to 17% of my portfolio right now. And I'm only doing that because I have Microsoft, Tesla, Apple, and all of that sort of sitting there. There's what I can rely on. I know they're going to do fantastic. These other ones, they look great. I'm hoping they'll do fantastic, but we don't know what we don't know. And finally, the last mistake I think people are making is they don't put enough money in their investments. If you only invest like $1,000 forever and you don't sort of change that, you don't have much capital to work with. And compounding interest, I've heard, is one of the the 8th wonder of the world or something like that. The reality is you need time and you need money. And some people just want instant gratification, so they'll go to the store, they'll buy their new headphones, they'll buy their new Gucci bag or something like that, instead of realizing that you can make your money work for you. And once you start seeing it that way, where like $1 can make you $1.15 every year or $1.08 every year, and it just sort of compounds from there, you can start building incredible wealth that can now be used to buy those luxury items that you like. So that's sort of like what I think about the biggest investments that are keeping most people poor. I would love to hear what your thoughts are. What's your investment journey been like? Please share that with us in the comments below. Also, don't forget to like, subscribe, and share the video. All your help definitely helps out. I want to grow this channel. I want to help support you guys on your investing journey. Keep watching these videos if you want to learn more, and if you want sort of my guidance. Check out our free public Discord. Thanks again for watching, and I'll see you in the next video.